Thermax is a stock which we were discussing. MS Unnikrishnan, MD of Thermax, now joins in. Mr. Unnikrishnan, thanks for joining us. I was talking about the industrial capex and where we are in that cycle, and are you seeing any sort of slowdown in your order intake?
Well, there had been a difficult and challenging time in the last quarter. I would say that the Q3 portion, Q4 I won't be able to comment on the numbers. I have not seen a remarkable slowdown, nor am I seeing a remarkable recovery. There had been a reduction in order booking for the company, and I can see in the general industry also. But the order and inquiry inflow rate is steady at this point of time. But the decision-making process is taking a little longer time. Added to that is the interest rate increases enforced by the government policies, which may be one of the factors contributing to the delay in the decision-making. But there is no slowdown beyond the level. I don't think I'm reading in such a way that things are going to slow down. Certainly, no. I'd rather look forward to pick up in the Q1 and Q2 of the coming year.
That exactly was my next question, Mr. Unnikrishnan. I'm not referring really only to Thermax, but for the capital goods industry as a whole. How much worse was Q4 compared to Q3? How much of a slowdown, or even to Q4 a year ago, was the slowdown perceptible? And what makes you confident about Q1 and Q2? Is there any indication that decision making is speeding up?
There is a perceptible reduction in the inflow and decision-making process across the industry for both Q3 and partially Q4. I can see a recovery in thinking in the minds of the industrial leaders of the country, where they need to be investing for capacity enhancement. I can already see that. It is fairly widespread. I have seen some amount of decision-making accretion increase happening in the past maybe a month or so. Why I am talking about Q1 and Q2 going to be better is that many of the clouds are getting away from the minds of the decision makers, because some of this uncertainty is prevailing in the political circles, and also inflation rate continuing to be remaining at double digits, and the interest rate climbing up. Put together, many leaders have delayed the decision making, but some of them are aware of the fact that Indian growth story is not going to be slowing down. You may have a cyclical negativity found temporarily. So many of them are coming forward and currently started negotiating for finalizing orders. So that is fairly easily visible. Now, if you go to take the indicators from one or two industries, for example, steel industry, cement industry, I have seen finalizations happening, whether I have got the order of my competition got the order in the last maybe a month, and I can see many more finalization planned and slated for the next quarter. Similarly, I can see across medium sectors like food processing, hospitality, I can see order finalizations happening, unlike maybe the Q3 times. So these are the indicators at this point of time which indicates to me that things are going to pick up in the next 2 quarters.
Can you put some numbers to what you are saying, Mr. Unnikrishnan? As of end Q3, you had told us that your order book stood at 7,100 crores. Can you give an idea what it was on March 31? More importantly, where do you see it, say June 30th or September 30th?
Well, I would certainly see a reduction in the order carry forward in the coming quarter on account of the fact that Q4 normally capital equipment industry has the highest of the revenue recognition done. So there will be a depletion, but the order booking, the fresh orders picked up in Q4 will be better than what I have done in Q3. But numbers, unfortunately, I am not in a position to right now tell you, because I have to wait for the board meeting to be over on the 2nd of May. But if I were to look forward to what am I expecting in Q1 and Q2, well, I would certainly look forward to a better order booking than what we had in Q3, and progressively going up at least by 10 to 15% in the next 2 quarters, what I am looking forward to. Looking at the order finalizations happening in the market, the next question is am I going to get all those orders, or competition will also pick up some of them? Certainly they will also have a share in that. But overall order finalization in the market is going to be better for Q1, is my current understanding.
Mr. Unnikrishnan, you are a debt-free company and have quite a bit of cash, actually, more than 700 crores on your books. Do you plan to go for some sort of inorganic move going forward?
Last year we had already done inorganic expansion in terms of an M&A done with Dan Stoker of Denmark. Along with that, we also got another company in Germany, that Omnicl. So Well, not that we are not looking at that's a possibility. Our first intention is to ensure the domestic growth that's happening, we are able to capitalize on that, number one. Second is selectively look at companies which will add value to. We don't just go around and look around for companies to add on to our portfolio. We certainly look at strategic fit for our organization. Should also go along with the plans that we made for expansion of our footprint outside India. So certainly we are on the lookout. If there is something good coming in, we will not disappoint you.
Okay. FY11 was a tidy improvement over FY10 if you looked at the 9 months. Will FY12 show something similar?
Certainly no. Like you would have seen the first 9 months of the FY11, we growing at a rate more than 50%.
Yes.
That is certainly a major step change for the company. Thermax will be looking forward to consolidating the balance sheet in the coming year and then having the next step change happening in FY13 and 14.
Mr. Unnikrishnan, finally, how much of your revenues come from exports, and the kind of strength that we have seen in rupee of late, are you going to be impacted by that? Do you hedge your some of your export revenues? What's the policy at Thermax?
See, export revenues have dropped as a percentage of the overall revenues for the company in the last 1 year on account of the fact that domestic growth is consistent and international markets haven't picked up. I am also seeing a recovery in order finalization in the Middle Eastern sector, Southeast Asian sector, which did not happen in the Q1 and Q2 of the last year. I do have inquiries. In the oil sector, there are inquiries coming in from Southeast Asia. Overall, there is a positive outlook at this point of time. Both Europe and America continues to be not doing too well for the company. Though my company which I picked up, that's the Danstock, our order booking had been better after our ownership has taken charge in the last 2 quarters in comparison to the previous year for the same quarter. But otherwise, for the parent company, the order intake from both Europe and America had not been anything great to talk about. So I don't expect that there will be a major recovery going to happen in the international markets for my company going forward. We'll still remain an 18 to 20% of the top line coming from the international market at this point of time.
When you spoke to us after your Q3 numbers, you said that your revenues from the environment segment is about 30% of your revenues from the energy segment. Is that equation changing?
It is 80-20, Latha.
Okay.
80% of Thermax is energy and the 20% is environment. The growth in energy is in any day a better proposition in comparison to environment in any building and developing economy like India, nation building going on, because energy is going to be provided to the people. You will depredate or destroy the environment, then you go ahead with investing in the environment. That's where the normal growth pattern of the countries are. So environment business will lag behind the energy. However, there individually, if I were to look at the numbers of environment business of Thermax, the air pollution control, water and chemical put together, there is a substantial growth in the current year also, and I am looking forward to it growing at not less than 15 to 20% going forward also.
All right. Mr. Unnikrishnan, we appreciate you taking time out for us. Thank you very much for joining us.